Welcome to another episode of the Weekly Crypto Check-In, recorded on August the 20th, 2025. I'm your host, Robert Swarthout, and joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, good, Robert. Good to see you again. Hope this sweltering, humid August heat we find ourselves in here in Atlanta isn't wearing you out too much. I'm eager for fall.
Yeah, eager for fall. And, today's not too bad, but you're right. It has been kind of rough over the last week. But we're inside. That's the good news. So we don't have to worry about that recorded podcast. We can talk all day, and then we don't have to go back outside.
That's right. Right. That's good to see you.
Well, we can jump in here. So our first topic is from the Treasury. Is it Vicente? I forget how to say his last name. But basically, U.S. Bitcoin holdings. He was talking about that. There's been a lot of conversation, and really more so just questioning about how much Bitcoin the U.S. holds. We talked about it in an episode or two ago about how the U.S. did release their crypto. The task force had this thing about bringing out a review to the president. It did not include anything about Bitcoin holdings. We still have not heard anything about that. But the Treasury Secretary was on, I think it was CNBC, and there he was talking about Bitcoin holdings, and I don't know if it's a Freudian slip or is this a true slip up, but he said that the U.S. would not be buying Bitcoin, which admittedly that is my belief. But others believe that the U.S. will be buying it. And then he kind of later corrected on Twitter by saying that they would look for budget neutral pathways to explore expanding the Bitcoin reserve. It can be a soapbox topic for me, so I'm going to step off of it before I even get going. But here we are.
Yeah, look, we find ourselves reading headlines about the U.S. potentially taking a stake in Intel, and you and I have had these conversations on and offline about the U.S. or picking winners in the crypto space or in the private sector. I think it's a slippery slope once you go down that road, as you and I have talked about. So yeah, it's I think it's all about sort of transparency and what's the signaling strategy here from the White House and from Bacente's standpoint, right? Is kind of where I'm looking at this. I think there's a lot of interplay here with what's going on at the Federal Reserve, what's going on with the economy. Obviously, there's a lot of geopolitical headlines, and I am no expert on the economy, but I think that there's certainly a motivation. It feels like in DC from the White House to keep things as stable as we can right now. So as far as the jobs numbers and unemployment and what have you, so that sentiment stays high. So I wouldn't be surprised if we don't get this Bitcoin report around what the U.S. owns for some time.
Yeah. Agreed. And I think that, actually it's not a headline here, but I was seeing how some of the news today wasn't great about jobs and just, we're currently at the highest point of bankruptcies since 2020. So maybe another signal that the Fed might cut. I could see this administration waiting to maybe pass through this report when everyone's paying attention to better interest rates and everything else that might be following. So, yeah. We will see, but it was, what I couldn't figure out, and I kind of alluded to it in the beginning when I started mentioning this one was it a true slip up when he was on CNBC, or is it a Freudian slip? It was one of the two, and I guess time will tell. So,
I mean, now that I was going to say one last point. Well, now that crypto is on the ticker right at the bottom of all these shows, and there's instant news flashes, and there's all this coverage of what's going on, around ETF filings, etc. It's now almost like if you go on one of these shows, whether you're a CFO, a CEO, a government official, a regulator, you almost have to be prepared, because this drives ratings. Like the reporters, the people on the desk are going to ask, whether it's probably the topic necessarily that they've come on to discuss. Everybody wants to kind of know, like, what's your take on whatever's making news at this time. So it would be interesting to know, what is it, like a slip up, or was it something,
Hmm.
that he was signaling?
Yeah. Yeah. So moving on, our next topic. Man, it seems like every time I turn around, there's not a lot of news. Obviously, if you're watching this on LinkedIn or YouTube, you would see we only have 6 topics today, and this is over the course of 2 weeks. I mean, August is quiet, partially because the Senate is on recess, but it's it seems like every other news item right now is something about stablecoins. Goodness, over half of our list literally is about stablecoins today. But it's everybody wants to launch a stablecoin. Everybody wants to be part of a stablecoin. I just it seems like a bunch of Me Too right now.
Hmm.
So I guess kind of breaking this down a little bit, MetaMask, which is a DeFi wallet, is set to announce a MetaMask stablecoin that would be used on their platform, and it would be bridged to Stripe's Stripe new blockchain that Stripe is the payment processor they're trying to launch. So that's number one. Number two, Circle recently announced they're like starting Circle Chain. They have their own stablecoin, so that kind of fits in the same bucket. And then I guess we can jump ahead to the 2 topics ahead. I mean, the state of Wyoming launched a stablecoin, and they have a lot. They're more blockchain forward, crypto forward out there, which has been great. I did not see a stablecoin being issued by a state ever happening. I didn't really think about it, but it's still surprising. And it's a lot of news really quickly about stablecoins.
Well, I'd love to ask you as a sort of a follow up with respect to the rush from enterprise and government to, I guess, capture and seize the moment, issue a stablecoin. Have they outlined a lot of the use cases for the stablecoins, along with announcing plans to either create one or launch one?
I haven't seen much about that, much of anything, admittedly. It almost seems like, in another tweet about stablecoins that we could kind of talk about here is somebody hypothesized that it's the year 2030, and you just paid with USDC on Circle Chain, but the merchant only accepts Stripe USD on Stripe Chain, and B of A, and then they want to transfer to their B of A account, and B of A only accepts B of A USD. So we're going to end up in a world with a bunch of fragmented dollars. I mean, that seems to be where we're headed. I'm sure it'll likely shake out in a better way.
Yeah, it's going to be messy to get there.
It's going to be messy for a little bit, right? In assuming that they're all similar, like, why do we need so many? I think it really comes down to, especially the banks, they want to have their stablecoin with their branding on it. They don't want to be using a JP Morgan chain coin. It'd be I guarantee that.
Yeah, no doubt.
Right now, dollars don't really have any brands to them. They're just US dollars. So
yeah, I think I saw something about how retailers, let's take a Best Buy or say an Amazon, major national retailer in the US, how they would potentially utilize a stablecoin. I could see the headline that I read about it being sort of tied into a customer's rewards program, and they could utilize those points and rewards, if you will, the way that we think about using airline miles or points that we accumulate on our credit card, etc. But yeah, when a state issues a stable coin, you kind of got me stumped still, because I'm, we're in the space a little bit, but it just speaks to the gulf between the people that are really at the forefront of innovating for the sake of innovating. That doesn't mean that it's needed. It doesn't necessarily mean that it's going to survive, but I think it speaks to the fact that this is a very big, broad, wide space where a lot of stuff is being, I don't want to say thrown at the wall, but it's being created, and how much of it's going to scale, how much will be around in a year, 2, 3 years, how much of it has application to customers and consumers. Way more questions probably for the average person than answers.
Yep. And I think in the short term, we're likely to only be getting more complicated, more messy, and then at some point it will shake out. I think around the time where rates really come down and it's not as sexy to have a stable coin, I would imagine that's about the time, because it won't be throwing off as much cash, because as a stablecoin issuer, you are legally not allowed to pay any sort of interest type situation to a holder. So, anyways, but it's I don't know. Stable coins are all over the place. So here's another example. We're going to move on to our next topic. So Bullish, that was the recent IPO that happened since our last recording. So we'll kind of talk about their IPO first. They IPO'd on August the 12th, I believe. The IPO was 20x oversubscribed. Okay, just a little. The offering was upsized from 629 million to 990, and they had planned to price at $32 to $33 a share. They ended up opening at. They ended up pricing at $37 a share, so a little bit higher, about 20% higher. But they opened at $90. Who failed in this, Andres? Are the bankers just screwing these companies, or like why is there such a delta in what the price is and what it opens at?
Yeah, I think there's a lot of different theories. I'm no expert on IPOs, but I think there's something about pricing it at a range where there's access, let's call it, for investors, and then getting that what they call that first day pop.
Right.
You would think that there wouldn't be as much of a delta. It seems like there's more, I guess, egg on the face of the banker
Right.
when there is this big pop the first day. It certainly is, an environment where it seems like there's a lot more tailwinds around technology companies, crypto companies, etc. But it does feel like you maybe left money on the table, right? From the standpoint
over 100%, just to be clear, in this case.
from the company, Yeah, it's probably out there. Like if we dug in, like I'm sure there's some pretty good research and like analysis behind why the delta is so big. But yeah.
So I guess the second half of why we're talking about this is they received a portion of their proceeds in stablecoins. It's the first time ever an IPO has done this, and Ripple was the one that tweeted about it. I think maybe they've a couple different types of stablecoins, but RUSD was one of them. And but they received a bunch of different stablecoins. I'm looking at a list here. Yeah, it's kind of cool. Obviously, they're a blockchain company, so it makes a little more sense. But and they arranged to receive 1.15 billion of the proceeds in stablecoins. So they don't have to hold in the bank, and they can send a wire very quickly. I think it's or a transfer very quickly, not a wire. So pretty cool.
Yeah, for sure. Yeah, definitely new and different.
Yeah. Maybe they're gonna go on Polymarket and make some bets. Who knows? We'll see. Moving on. Well, we already talked about Wyoming, so we'll kind of skip over this one. So an executive order Trump signed roughly a week ago, basically guaranteeing fair banking for all Americans, and it really was a signal like don't debank the crypto industry again. And he basically pushed to have regulators be reviewed, and also there's some punishment. Again, this executive order, this could go away, and if we have a different president in 3.5 years, but this is not the environment that we likely would get debanked in. We've already kind of been through it. We know what it looks like, but hopefully we are past that forever, and we can kind of move on. This kind of came out of left field because I figured if he was going to say this, he would have said this, back in April. Why are we talking about this in middle of August? So it's a little different.
Yeah, I'm curious. I think we had a headline 2 shows ago about the lobby for the banks in the U.S. The American Bank Association had, basically put out like a stall tactic, let's call it, for authorization of a couple of bank charter applications from a couple of companies. Any update on that? And do you see this as like another, I guess, just another stiff arm move, if you will, from the White House to the TradFi economy, that we're not going to go down this path again, where we shut down banks and kind of force crypto into the backwaters or offshore, et cetera?
Yeah, it's a great question. I hadn't necessarily thought about this angle. It could be, again, the Trump family and their orbit definitely is in crypto. So this could be something coming from that angle. That's not how I read this, but definitely in second thought, it could be. You know, and it wasn't just about debanking crypto. It's about coming up with political reasons to debank a set of individuals or companies in the U.S. Is really kind of the language that was used in it. It's just all about like follow the laws, don't make them up. It's another way that I saw somebody tweet about it. So,
is it around the notion of banks and companies can't pick who to do business with based on values, based on et cetera? I mean,
They didn't get it.
Crypto is within this whole
So it says political
order.
beliefs, religious beliefs, or lawful business activities, ensuring fair access to banking. Right. So if this was just for crypto, then they could have been more obvious about it. But it definitely was received in the crypto news cycle as about like we have a little bit of, I guess, we have a little protection of sorts. So,
well, on a somewhat similar sort of vein, several years ago, in asset management, there was this big move into what is known as ESG, and the ESG movement was, around environmental, social, and governance related frameworks, if you will, for investing. And, it's adopted all across the spectrum around the world by different investors. Some are more E, some are more G, some are more S, right? But you don't hear as much about it in the quote unquote mainstream. And even, some companies have just outright changed their whole, let's call it asset management framework, and have no longer or aren't as publicly, at least, stating that they are going out and investing along ESG. What I haven't done is I haven't gone and looked at the impact from investors to those moves, like, because ultimately are investors investing in those funds, or are they investing in companies that don't have ESG related mandates? Because there was a time when people were, seeing these mainstream asset managers say, carbon neutral funds, or, green environmental funds, et cetera. And you just hear less of that right now. But around the same kind of idea is, there's a lot more top down sort of emphasis right now on like that is not going to be as much in vogue, if you will, from the corporate sector.
I think we talked about BlackRock winding down or really shrinking their ESG departments. Gosh, maybe 3 or 4 months ago. Wow. Around the same time that there was news that they were hiring a bunch of crypto. So I don't know if they just changed everybody's job title or how that worked. But yeah, it's you're right. It is not in vogue. And my good friend Casey Smith, he if you want to get a soapbox topic going for him, ask him to talk about ESG. So
well, I didn't say it was popular and it necessarily made money. I just know that, asset management and Wall Street, they've never been a product or strategy they wouldn't try to create if they could sell it and make fees. On the subject though, I wanted to ask about my train of thought is slipping me, and I know we have one more topic, so go to that one. Let's go to private assets in 401ks, and it'll come back to me.
Yep. So Trump, this is another executive order, but Trump signed an executive order easing the path for private assets in 401ks. Private assets could be anything from literally private shares in another company to being some people reading this as crypto, maybe able to more easily get into a 401k. I think it can mean a lot of different things. And what is not clear to me is you could do a self-directed IRA right now, and you could do crypto that way in limited ways, but you could do it. 401ks, obviously, I think we're out in the cold, and there's probably a lot more funds sitting in 401ks at this point.
Oh yeah,
across the whole, economy here. But what is there any other type of retirement account that should have been included besides 401ks? That's the one thing that I wondered. I mean, IRAs already are there, so I think it seems like it's finished, but I wasn't sure.
Yeah, I mean, I think the nature of defined benefit and defined contribution plans, right? Like the defined benefit plan, usually that plan sponsor, that retirement board has a governance structure, and they'll decide, what they can and cannot invest in. And I guess if you elect to be an employee of that organization, whether you're a teacher, firefighter, public, worker that has that
Mhm.
defined benefit plan, they could elect to have private assets. And in many states, they do own a substantial amount of private markets assets, maybe not necessarily crypto.
Sure.
Although we have talked about that in a few instances where plans have revealed that they do have some crypto holdings. And we talked about recently the fact that because of MicroStrategy, indirectly Vanguard became
Mhm.
one of the largest owners of
Right.
that stock. And because Vanguard is, such a large asset
Mhm.
manager, many people own sort of by default, if you will,
Right.
MicroStrategy,
Yes.
whether they're in a 401k or not. But yeah, I mean, it's qualified accounts. That's how I've
Mhm.
always looked at these retirement accounts, like qualified money. So I
Okay.
don't know about some of the smaller types of plans. IRA kind of scoops up all of them, and then you have 9 flavors of vanilla when it comes to IRAs, depending on what they are. But then there's other things like Kios and other qualified plans. I just don't know the nuances of if this EO from President
Covers
Trump
those. Yeah.
includes all of that. This probably is the biggest category with the most
Mhm.
assets. So it makes sense why they would go here.
Yeah.
My follow-up question is on this EO, is it your understanding that just because an executive order is issued doesn't necessarily, number one, make it law. It
Correct.
just starts to create an opportunity, if you will, for industry to try to put in place, if you will, plans. But the
I think
regulators and all the players in the middle, don't they still have to
I mean, they still got
step
to do
in
the
and
work, right? I mean,
yeah,
there has to be follow through. So I think it's a couple things. It kind of sets a little bit of momentum in place,
yeah,
especially if they get the regulators to do the rule making around it that they need to. But also, the momentum and just it also gives time for people to go lobby their representatives to try to get this, turn something from an EO into a law effectively, right? Um,
yeah.
so it'll be kind of back to the beginning, the whole thing with the U.S. Not going to outright buy Bitcoin potentially. It could be a budget neutral way. That's the way the president's saying it. But if Congress decides to write a law, obviously they can try to pass that, and then it becomes an issue for whether Trump wants to sign it or not, or whoever the president may be. So it can get there. It just takes longer, obviously. So
Yeah, I mean, I think the headline around private assets allowed in 401ks is in and of itself, including the crypto digital asset space, is a substantial uh, bit of news if you think about it, because for a long time, when you looked at these 401k plans, they historically had a structure and investment allocation, which was, mostly made up of stocks, bonds, and cash, or some type of, government-like securities that were almost the equivalent of cash, right?
right.
Um, in terms of a defined contribution plan like a 401k. So if in fact, we do see over the next several years, which feels like how long it's going to take, broader adoption, it'll be interesting to see what happens because, BlackRock, for example, does a lot in private markets. They've made some big acquisitions. We've talked about, obviously, they've got the most successful ETF out there
Mm-hmm.
with respect to,
I
Bitcoin with
did.
IBIT.
Yeah.
Vanguard to a lesser extent, but a lot of the biggest traditional asset managers have been acquiring or partnering with these alternative asset managers. And so you have to think those acquisitions and a lot of that M&A activity that's happened over the last 5 years, 10 years,
Mm-hmm.
and will continue to happen is about growing fee-based revenue, right? If you're a
Absolutely.
publicly traded company, and the higher fees are going to come from these assets, that are in the private markets. And so this is, kind of one of, if you include private wealth and retirement assets of private wealth or private individuals, is kind of the last, if you will, frontier
Mm-hmm.
for asset managers, particularly those that are doing private markets, that they haven't been able to sort of penetrate. And a lot of it comes down to what does the Department of Labor have to say about this, and
Right.
what is the governance and political will to really see this happen. I personally think it does happen over time, and individuals end up with more choice, but still a lot to to be worked out in the coming years.
Yeah, and be messy in the meantime is what it's going to turn into. So,
yeah.
Yes.
One of the headlines that I wanted to bring up, I guess a bonus one is, there's been this, there's been this, window, call it of market opportunity for companies, technology companies, crypto companies to file to go public. The one that I saw this morning is the Gemini, famous for its owners, and founders, the Winklevi or the Winklevoss twins, that they were, that they filed late Friday an S1 with, I guess, the intention of going public, but they revealed some numbers which showed ultimately the news headline is that, okay, they are filing the paperwork to go public. They could always pull it. But what's your reaction to the fact that, they're financially what we have access to publicly, they're just not as strong of a company, at least when you compare them to a Coinbase and to a a Bullish or a Kraken. Like, is this all market timing and kind of being opportunistic when you look at it?
Yeah, and I think there's a chance that we would have never seen this one if we didn't see Circle and Bullish go crazy, right?
Yeah.
Circle in particular, but what I would say is I've never viewed Gemini. I mean, Gemini is a respectable business. Let me say that up front. I've never viewed them as some like home run from a VC perspective. They've existed. They got brand recognition, but they've never felt like they had any sort of meaningful market share. And I would imagine that maybe somewhere in that S1, I haven't bothered to dig through it, but it's I think we're going to see more of these. There's some other, again, they've done the hard work. They've started a business. I don't want to detract from that, but there's going to be more of these kind of coming along because we've seen some really crazy numbers from the ones that were out of the gate first. So
yeah, interesting.
Yep. Cool. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.